Hello and welcome to another episode. This is episode 3 of Market Maker Mondays, and I am the Nomadic Trader. Thank you very much for clicking on the link and having a look at the video. So, quick overview. What you're going to find in this video is a recap of what I covered in the previous episode, this time last week. Just going over basically what I covered in brief, just to give you a quick summary, and then there's something that I actually want to point out a little bit later on in the video where I wasn't actually correct in my prediction, where basically the market didn't actually come down as low as I thought it might before it then breached on for higher objectives. And I want to actually explain in detail exactly why I was wrong. Excuse me. And then what I would do is, once I've done a breakdown of the previous week's analysis, I'm then going to go for a projection over what's happening, what I think is going to be happening in the market next week. And then also, I'm actually going to bring a bit more detail and a little bit more context to not just projecting what I think could happen, but also what that is likely to look like and what that could mean for the price action throughout the week. So what I mean is, not only do you need to predict or anticipate what's going to be happening next, you also need to take into consideration what that's going to look like and how we're going to navigate through the key levels, through price action throughout the week, taking into consideration the power of 3 on that weekly candle, how we're actually going to deliver that on a daily, a 4-hour and a 1-hour time basis. So without further ado, if you've been following this series so far, we'd highlighted, and just wanted to say as well, I have been getting more and more feedback regarding the candles. So I've made the blue much brighter so you can see them. I've also made the wicks much brighter as well. And then I've actually put the trend lines as white. So hopefully you can actually see this better. And it is also worth noting that it seems to be people that are viewing this on their phone, because when I went back in and I checked it on my phone, I completely agree. It does actually make it quite difficult to see the charts properly. So we've got this down candle here, which has actually formed the basis of a bullish order block. We've had this swing low here where we've had a higher low either side of this low here. So we'd already highlighted this and we were expecting prices to come back up. And price was only really just starting to reject this level here when I first pointed out this key level, and that would have actually been within the first week of June on episode 1. And then in the previous video, what I said was the significance of this down run here, where we're actually now trading above it, and this candle was actually down here. And what I had actually suggested was, if this key level basically holds, then this is actually then confirmed as a bullish order block. So there are 2 ways that you can treat an order block. In order to trade it as an OTE pattern, it needs to move away, and then you observe it on the same time frame, which comes back down to retest this order block on the fib levels, which ICT teaches. The other way that he teaches is, when you actually first trade above this, you can still expect this to hold for support. So that's what I anticipated last week, and we did actually get that. And what I actually said was, what I would like to see at the beginning of the week, Monday, Tuesday, maybe into Wednesday, is we trade a little bit lower, and then we start to reach for higher objectives that we'd highlighted on the weekly and the daily time frame. Okay, so with that in mind, that's the monthly time frame. And before we do check, if you just have a closer look, so we've got the swing low. What I want to do now is I want to find the dealing range on the monthly time frame that is most pertinent, do you like that word? Pertinent to the context of the framework of what we're outlining here on the monthly. And to point it out, there we go. So what I'm going to do, I'm going to drop a fib with the discount and premium tool on there. Get that nice and clean. So you can see that we're actually right at that 50% mark. We traded below into a discount, ICT did actually cover in his recap video yesterday or today why we were rejecting that level of support. I don't actually have that on my data feed. I don't use the same data feed as what ICT does. So he actually pays a monthly fee for the futures live feed, whereas I don't. I'm on a complete free plan. So all I've done is I've just blocked the ads down here. Sorry about that trading view. So I will point out I was paying for pro membership to have multiple charts, but I'll be honest, I really wasn't getting the benefit from it. So I've just decided to just axe it for a whilst I'm actually making some cutbacks on my monthly expenses. So we've got this dealing range on the monthly time frame. We're now starting to enter the realms of a premium. So I'm going to go down to the weekly time frame. So I'll bring this to the forefront. So visual order, bring to the front. So we've got the 50% mark. Now, what I'd actually suggested was we had this dealing range here that hadn't actually been breached to the upside last week. So I saw this here as a deep retracement into a premium. And then my target was going to be here, and then closer up was going to be here for those equal highs and this weekly fair value gap here. So I'll just drop those back on the chart now. Expand that out in time. Sorry if I'm going a little bit fast. Okay, so with this indecision candle, this doji candle here, I was actually anticipating a drop lower in price into this fair value gap here. So what I'll do, I'll have that there and I'll label these as well. So as we go up and down the time frames, a little bit clearer. So daily, fair value gap. Okay, this is also, sorry, weekly. It's weekly and daily. So I'll save myself some time because I know what that is in price. So you got your weekly and daily fair value gap here. You've got your weekly fair value gap there. So you've got your two PD arrays on the opposing sides of the market. We've got the dealing ranges because obviously if we break this here on the monthly time frame, we've actually got that swing low, and we're going to still continue to expect higher prices until we see a reversal in the market now. So where we're actually stalled here in price, this weekly candle, this doji candle, I was actually anticipating a drop lower to tap into this region to leave a nice wick below and then extend it higher. So in price, it would have actually looked like that on the candle. That's what I was expecting. However, going back in to backtest this before doing this video review, I've actually identified why that was actually wrong. And I did actually brush on the idea, but I wasn't firm with the idea because I just didn't have that first-hand experience with these ICT concepts to actually hold that as truth in my mind, which obviously I've updated that now in my sort of mental repertoire, if you like. So we did actually see prices drop lower. We didn't actually take this low. We didn't drop into the weekly fair value gap, but we did see a nice expansion to the upside. And the power of three, we've got the low here, which was where we'd actually gapped up slightly. We've come back down to fill this gap, and then we've traded higher. So that's the weekly time frame. This white line here, I will label that. So that's the monthly bullish order block. And I did actually point out the fact that where we've actually got this candle here, that bullish order block actually falls right bang in the mean threshold of the body of that candle there, if you see that. I also had a request from JC on YouTube. I'll put the comment as an overlay now so you can see that. So thank you very much for the suggestion. I appreciate the time that you put into leaving me the feedback and the request. And that was actually regarding doing an overview of an ICT rejection block. No, sorry, wasn't a rejection block. It was a breaker block. So a breaker block, a rejection block, all of these different things, they're all order blocks, which is basically, in a nutshell, is where we're actually having significant orders in the market and a change in direction and different areas in the chart, PD arrays within price structure that have significance because that's where there's an exchange of orders. So if I draw your attention to this here, so this here is a breaker, so ICT breaker block. And what that does is, if you go through his content as well, you can actually find these. So we've actually got a trade below a short-term low into and in a bullish scenario. This will actually give you a trade below short-term low here, which is, this has induced liquidity here. We've paused just before this key level here, and on the weekly time frame we've got these equal lows as well. So what we've done is we've actually induced some liquidity here with this bullish engulfing candle, and so you'd have to apologize, it's absolutely boiling in here, but I can't turn the fan on because you'll pick it up on the microphone. So basically what it does is the breaker block actually goes through, it breaks this low, it trades into a slightly lower support level, which is the true objective, and then we start to rally higher and we take this out here. And it does actually pick up on a daily setup as well here. So if I go down to the daily time frame, we've actually got this one here. So we've come down, taken the lows, and then we've traded above it here. And it actually highlighted this as being the reason why this level held. So this is a daily example. So basically we sweep down, we take the liquidity, we trade into a support level, and then we rally higher, and then it takes out this liquidity here. So what it does is it induces sellers into the market, all of their stops go here, and then it breaks that. And then when it comes back down to reject this level, this is actually a rejection block, and I think it might be classed as a mitigation block as well, because orders that are actually people that have shorted this, that were on the wrong side of the market, are looking at mitigating their orders when it comes back down to this here. So I'll take that off there, go back up to the weekly time frame. So hopefully, JC, that does actually answer your question regarding the ICT breaker block. So it's a trade below a short-term swing, or it could be a short-term high here where it trades higher and then it comes crashing down here. So this move here is simply to induce more buyers, and what they do is anybody that was looking at getting short here near the support, the resistance level, as they would be here with the support level, their stops are here. The smart money takes it up, the algorithm takes it up, it exchanges all of that buy side liquidity with sell orders, and it comes back down. So we've done that here on the weekly time frame, which gives me confidence from the monthly and the weekly that now we have actually had the shift in market structure here. We've got your bullish order block, which we traded higher. I'd highlighted this in the first video, and then we created this weekly and daily fair value gap and traded to the upside. And our objective was this for first objective, and then these relative equal highs here, as well as the weekly fair value gap was objective number 2. So this is actually lagging slightly behind the NASDAQ. So if I just move up to the NASDAQ, you can see that we are right on that level there now, whereas we've actually got some room to go here. So on a weekly perspective, I'm going to expect a run up higher into this level to take this liquidity and then come back down to close into the range of this candle. That would be one anticipation. For a second anticipation, I'd be expecting a run lower to come back down into the range of this previous weekly candle, but not below the 50% mark. If we trade below the 50% mark here, then that actually tells me that this could potentially be reversing, at least for a deeper pullback into some of this region here. So it's important to look out for the 50% mark of this weekly candle. So any price action that we see at the beginning of the week next week to trade lower is going to give us the low of the week on a power of 3 weekly candle, just like we did here, and then we'll see a weekly range expansion up to take this liquidity and to come back into this. So if we take these highs, then the next objective would be the mean threshold of this fair value gap here, which is the 50% mark, and then the full objective here. And then if we wanted to go even higher, then we would have this last up close candle here. And then even higher than that, we'll be looking at taking the external range liquidity here on the monthly time frame. And obviously, all we need to know moving into next week is we're expecting a weekly range expansion higher to take this liquidity, but we're going to consider how the weekly profile starts to unfold on Monday and Tuesday, and then maybe the beginning of Wednesday. Because that what that would do is it will help to give us an ongoing view of what that weekly expansion candle is going to look like. There is another option that, because of all the hysteria that would have had here, there could be some gapping into this liquidity overnight. And if we do have that, we can either have a few things. So we can have a gap and breakaway, which I don't think is very likely, but we could also have a gap into this liquidity. We can have a big purge of all the liquidity here, and then we could have a hard sell-off down here. But what I'm going to be doing is seeing how the market opens, and then I'll be looking at just trading in the direction of the 1 hour trend. So if we go down to the daily time frame, what I'll do now is I'll delete that because that's an old key level. I keep this level on because this is a significant level. We've also now got this daily fair value gap here. What I'll do as well is what I thought about earlier before doing this video is I'll actually take a screenshot of this on the different time frames, and I'll actually include them as a trading view screenshot link within the description below. Also in the description below as well, if you've made it this far in the video, well done. But in the video, I'll include the link to my second channel where I'm documenting living full-time in my car whilst I navigate out of the 9 to 5 rat race into becoming a full Forex trader, or financial trader, I should say. And I'll also include a few of the links as well. So I'll have a link to my Twitter, and then also there's a link to the Discord group where I'm actually part of the community, and I'm asking questions and things like that in an open forum environment. So we've got this here. So what I wanted to touch on is, you can see if you compare this data to ICT's, if you've watched his video recap already, you'll notice that I didn't actually have this vacuum, this void here in the data. And even if I did, I wouldn't have naturally known what he was actually teaching in the previous video. That's completely new to me. However, what was on my radar was this here. So this here is a bullish order block on the daily. We've actually traded higher than this candle, also the high. And the significance of that means confirmation as this is a bullish order block. Now, if the daily price action, the order flow is going to remain sponsored to the upside in a buy program, what does that mean? It means that the downwards candles are not going to be violated. So you can see here we've got down candles, we broke higher, we'll come back down to trade into it. And then we've got the same here. So we've actually come back down, we've almost traded into this, but what we've done is we've filled this fair value gap to go higher. So where we've actually got the confirmation of this bullish order block, the daily order flow on the daily time frame, the daily order flow is actually being sponsored to the upside. So where we've actually come back down to reject this level here, we've now reached the discount PD array of this trading range here. So in order for the daily to remain bullish, we want this trading range to remain intact for this low to this high. And where we've actually come back down into the discount, we've actually traded back into the mean threshold of this candle here. And then we've actually traded to the upside. And then what we've done is we've taken the buy side liquidity, we've taken the sell side liquidity here, but nothing has changed in terms of the order flow, because this here is the candle that we want to keep an eye on. You could also argue that this would be like a 1 hour dealing range here, but because we've got more solid price action here and this just seems really choppy, I wouldn't have any confidence to take that into consideration. So this here is where I'm going to draw your attention on the 1 hour time frame now, because what I didn't witness at the time, I just saw this as consolidation and I was expecting a drop lower here. But where we've actually got that order block, we draw that out in time. And if I label that, apologies, I know it's very cluttered at the moment, but because it's such a detailed review. So we've got your daily bullish order block here. Extend that in time. You got your 1 hour time frame. So we've actually got where the market's traded higher. We've created obviously this buy program. This is consolidation. We've traded higher. So we've got the low to the high and OTE set up here. I won't draw it on. I'll leave that for you to check. We've got the low here. We've traded higher. We've got the OTE set up here. And then we've actually got a failed lower low here. And this was the setup that ICT caught and then took profit above this. So I was actually expecting this to come lower here and to come and take this as objective number 1 and then this as objective number 2, as I'd outlined in the Discord channel. So I did actually take a loss on this, and then obviously I missed this move here because I was still convinced that we was actually going to be coming lower. So that was a loss for me. I did actually manage to claw it back with plus some, with a few heavy-handed non-ICT trades. So I finished the week in fairly good profit. But yeah, in terms of my ICT trading, I was off last week because I was expecting prices to come back down here. So what I want to do is I just want to do a quick summary of what we've covered, because I know that was extremely detailed. We've got a bullish order block here. We've got a swing low on the monthly time frame. We've had a range expansion. We've created a bullish order block to the upside. That's been confirmed. We've come back down to reject that level. That's full confirmation. We're now trading higher. We've got a dealing range high to low here. We've got that outlined with now. Can't see any fair value gaps or any other areas of significance here that look better or more prominent than they do on the weekly time frame. So we move down to the weekly time frame, and this is where I would take my first screenshot, and I'll do it on camera as well so you can see it. So copy link to the chart image. There we go. Okay, that one there is the weekly. So we're expecting the draw on liquidity to be here within this region. Then we're going to monitor what happens. So we go down to the daily time frame. I'll delete this off. That's old news. I'll delete this off. That's old news. I'm going to leave all of this lipstick on, and then I'll take another screenshot. for the daily. There we go. And then we're going to be expecting the highs until we, and yeah, so I'll add this little nugget as well. So in terms of the daily directional prediction, where we have a swing low formed on the daily time frame, and then we have a trade higher to break the swing high on this to create a new leg up, this is still going to be a new run on the daily time frame, and you've got to remain bullish until you reach the next area of liquidity, which is here. And then what you need to do is you need to wait to see, does it want to continue higher? And it's breaking the high of each of these candles here. So in an up run, you break the highs. There you go. You trade higher than that one. You trade higher than that one. You trade higher. Then you've got this little swing low here. So then you'd be expecting price as you start to form this here, you'd be anticipating a run lower, but then you've actually created a swing low here and you traded higher, so the bias is going to be long. You're going up here and then you're going to continue to do that until we reach this region here. So I don't really need to go down into the lower time frames because that's likely to have changed significantly, but I would say a lot of people were chasing this run up. So I don't think we're going to go from here all the way up unless we see some gapping. We have a gap fill, trade up, and then we start to come lower. But with the hysteria that we saw in the market here on Friday, everybody's going to be expecting higher objectives. And that's what concerns me about jumping straight into this and going higher. So if I'm to trade this higher, then what I want to see is I want to see some form of a pullback, and then we'll have a look to see what we anticipate there. But in terms of the higher time frame bias, it's definitely still long into this region here, and then who knows, we may even want some more of this up here. You have a look at what this looks like. So this looks like an inverted head and shoulders to me. So you've got all these swing lows, you've got these swing lows, you've got these swing lows, and then together this is an intermediate term formation. If we then create one of these here, but on this side, then this becomes a long-term swing low, and then we can definitely expect price to resume to the upside, just like what we did here. So this one, and then this one here. So that's my 2 pence. Hopefully you found that insightful. And if you've got any questions or any feedback, please leave it in the comments section below. Don't forget to check out all the links in the description. And until I speak to you soon, take care and good trading.